All right. Well, hi everyone. Thanks again for taking time out of your day to see this incredible lineup of panelists here. We got a lot to get into, so I'm going to stay quiet and let these folks introduce themselves. Elaine, we'll start with you and we'll just go down the line here.
Hi, Elaine Asher, the co-founder of Eve Wealth, a new digital asset investing platform launching in Q1, geared towards women. We're trying to get more women to invest in crypto. I've been working in crypto for the past 8 years, marketing various digital asset investment products to mostly institutional investors. Happy to be here.
Awesome. I'm Bryan Chambers. I'm one of the co-founders at Capital Factory. I'm our president. I run our family of funds, and we are known for being one of the most active early stage venture capital firms in Texas. And so we're actively investing across the seed, Series A, and Series B stacks.
I'm Marcos Veremis. I'm a partner with Accolade Partners. We're a fund of funds platform investing in venture capital growth equity, but we are also the largest allocator in crypto blockchain venture funds. We have 1.3 billion in assets just dedicated to these strategies. And so I think I have a pretty high level overview of what the venture funds in the space are doing.
Ben Forman here, founder and managing partner of ParaFi Capital. We're an investment and technology firm that's focused on the digital asset ecosystem. We manage over $1 billion across venture, token, and quantitative strategies, and excited to be here.
We got a great panel here, so really happy to get into it. And Elaine, I want to start with you because you've kind of been towing the line between both in traditional venture as well as crypto venture. So more at a high level here, what would you say is the difference between risk strategy as well as portfolio management? Just at a high level, what are some of the key differences between traditional venture and the crypto venture side?
Well, I come at it from the institutional investor perspective, and I think especially early on when crypto first came on the scene, investors considered it early stage tech investing. Like they weren't quite sure what it was, but it's early stage tech. So I'm going to put that in my early stage tech bucket. And how do I typically invest in early stage tech? I do that through venture. And I might know some venture managers that I've used for years. Maybe they're doing crypto. And so maybe I'll then outsource my investments in crypto to a crypto venture fund. Or maybe I don't even know enough about how to diligence a crypto venture fund. So I will use someone like Marcos and Accolade to do a fund of funds. So I get great diversification in a bunch of different managers. But I think the difference that a lot of investors don't really understand or maybe are not super aware of in traditional venture versus crypto ventures, while it is all early stage technology, there's a big liquidity component to crypto. And I've always found it super ironic that investors are locking up their capital for typical venture lockups are 7 to 10 years, and crypto is the single most liquid asset on the planet. And so you have the opportunity to invest in liquid tokens, and I think a lot of institutional investors either weren't comfortable with the volatility or didn't even have it allowable in their investment policy statement or couldn't get their investment committees around it. So venture was a much more palatable way to get exposure to crypto. And whether they know it or not, a lot of crypto funds are holding liquid tokens and managing it for them. And I think when I hear investors say, I can't stomach the volatility of liquid crypto, like you have exposure to it, whether you know it or not. Someone else is just managing it for you, and you don't have to see it because it's not mark to market every day. I just think it's interesting, too, to see how institutional investors especially have come into the space and what's helped them get over the hump, and why we're seeing, and I know Ben and Marcos can speak to this more, why we're seeing more and more institutional capital come in, and you're seeing billion-dollar crypto venture funds for the first time. And I think it was University of Texas, which I don't know if there's any UTIMCO people here, who turns out that their early investment in Coinbase was the single best performing investment of all time in their entire history. And so their investment committee said, more of that, please. Go find us more of that. So they stood up a crypto team. And then it was University of Virginia, UVMCO, their investment committee got over the hump because they saw the popularity of blockchain courses on campus and thought, okay, if this is what students are clamoring to learn about, there's potential in this technology. So those are just some of the ways that I think investors have been approaching it.
Fantastic. Bryan, you did a lot more on the early stage side, and I'm kind of curious what you're seeing from the venture, capital funding perspective for both the institutional side and how some of those lessons may be applicable to crypto and maybe where they diverge a little bit.
Yeah, no surprises here, especially in the onset of the formation of these companies, these organizations, team matters a lot. I think that's the first place that we start. The market potential has got to be there. These are some of the commonalities. You've got to have a massive market size. You've got to be solving a real problem that's able to scale. So you've got to be able to get those network effects. I think those are some of the commonalities. The big differences are, Elaine, you talked about this. The liquidity dynamics are very different. Being locked up for 7, 8, 10, sometimes 12 years is very different than the liquidity options, when you're in the crypto space. The regulatory environment is very established in the traditional venture capital space. It's quite fluid. It's evolving and changing in the crypto space. And then I think one big difference is, traditional venture-backed companies really focus on customer acquisition. It's all about customer acquisition as they scale. And that dynamic exists in community building greatly, I think, when you're in the crypto sector. So those are some of the key differences. I think the one North Star, regardless whether it's a traditional venture-backed company or a crypto asset, is really long-term sustainable value in your community and solving a real problem. So I think those are some of the commonalities.
That's great. Actually, I'm glad both of y'all mentioned volatility, because Marcos, you're in a kind of straddling both worlds here. So how do you manage more the volatility side here, especially when you're talking to your potential LPs as well, but as well as just strategy as a whole, considering your unique position as a fund?
Yeah, that's so it's a very interesting question. I mean, we are a venture fund of funds, as I said, and then on the crypto side, we invest mostly in venture funds. We do some hedge funds, but it's mostly venture funds. And they, as you know, lock up capital for 10 plus years. Yet in the crypto space, the startups that emerge usually have a token, as you know. So after 2 to 3 years, all of a sudden you have a portfolio full of tokens. And all of a sudden you have these big swings in your net asset value. And some of your LPs might come back and said, well, I thought this is a venture fund. What's going on? Like, it was up. Now it's down. Was there a markdown? No, you're like, it's the tokens. So I think this has been challenging for us to communicate at times, like this inherent volatility that comes with this asset class. The way we manage it, I mean, we're agnostic between equity and tokens. We invest in managers who invest in companies, and most often, there will be a token. So we're comfortable with that. We're comfortable with the volatility. What we tell our managers, given what happened in the 18, 19 vintages, is if there's a massive bull market on the token side, think about taking money off the table. And the reason is, the way I think about it, and we touched upon it a little bit, is that you're investing in early stage startups. There happens to be a token and a price. It's extremely volatile because if it were a stock market, it would be extremely volatile for early stage projects. So you need to have both the mindset of the long-term venture capital value creation of these companies, but also the savvy of the hedge fund trader to say, okay, now it's really overvalued. I can send money back to my investors. And so I think this doesn't come naturally to many managers. They've either come from the hedge fund side or the venture side. But I think they've evolved and learned over time, and now I would call many of them, like Ben, for example, folks that have expertise in both mindsets of investing.
Well, that's a great segue. Ben, when it comes to more token valuation as well as strategy, what takeaways have you learned through this time in your space at ParaFi?
Yeah, just to dovetail on what Marcos was saying, I mean, look, this is a brand new asset class, 15 years old. $3.5 trillion of value. Bitcoin is about 60% of that. And outside of Bitcoin, you have 15,000 tokens that are traded on exchanges globally. That's about 4 times the number of publicly listed stocks in the US. This is a market without any public filings. Things go public in venture capital, things go public in crypto like very quickly, often without any sort of product. Like imagine if you invested in like a local restaurant and then all of a sudden it was publicly listed and the value changed 24/7. It would just be a bit bizarre. But that's kind of the nature of this space, which I think creates a lot of opportunity. I think the way we kind of approach the space is as we look at the vast ocean of tokens, we look for projects that have meaningful kind of fundamental use cases, have a reason to exist. If you do that, you've eliminated like 98, 99% of investable ideas. And then within the remaining 1% to 2%, to Bryan's point, you focus on team, you can look at on-chain data to understand intrinsic value. I think one of the misnomers in the digital asset space is everyone's fixated on, because Bitcoin is kind of priced relative to gold, but there's not an established bottoms-up valuation framework for Bitcoin. But in the application layer, all these other long-tail tokens, you can run discounted cash flows, you can look at price-to-earnings ratios, there's an incredible richness in that on-chain data, and that allows you to do all your venture capital style analysis, looking at customer cohorts, retention rates. You can get very deep. And if you see things before the market, you can invest. And I think the best way I've heard this opportunity set described is it's venture capital upside with public market liquidity. Yeah. And so as a venture capitalist, traditionally, you just have one decision to make: what to buy, and you wait until your companies get acquired or go public. There's not the decision on when to sell, but in this space, you have to decide what to buy, and then you also have to decide what to sell and when to sell. By the way, like what to sell and when to sell, to Marcos's point, is probably the more difficult decision at times. So it's just a different puzzle set, and it's interesting, it's fun, and there's a lot of alpha.
It's never boring getting crypto, is what I say, by all means.
Ben and Marcos, a quick question. I'm curious, Marcos, if any of your managers, and Ben, if you do this and can share, do any of your managers hold Bitcoin in their venture funds to make sure that they're at least kind of as a benchmark or as a thing to beat? And then I have to imagine there's got to be some kind of like programmatic selling involved there, that if Bitcoin reaches X, we're going to take some off the table to return to LPs?
Yeah, the answer is they do.
Yeah.
Many hold Bitcoin, and Bitcoin and Ethereum and Solana are generally quite held even by venture funds. And many of them view them as kind of reserves that they hold that will appreciate, and then they can redeploy that money back into startups. But I think also this has evolved in having just a perpetual direct bet in these assets simply because they are extraordinarily valuable assets, and they do represent kind of the beta of the space, right? But now with, I wonder, what Ben thinks about that, but now with Bitcoin ETFs and ETH ETFs, I wonder whether investors are going to come back and say, hey,
I don't want to pay 220 for you to hold my Bitcoin.
Right.
Yeah, I mean, it's an interesting question. I mean, it's like, if a hedge fund holds, Amazon or Nvidia stock, should they get paid 220? Well, someone can just buy those stocks directly themselves. So there is, I think, a question of alpha versus beta. I think historically it's been acceptable to hold those, but I do think that things will begin to change.
Now, Bryan, you mentioned the regulatory environment, and we've already covered a lot of that in this conference here, and we'll be covering that down the road too. So I'm not going to get into more of the regulatory stuff. I deal with that enough already, unfortunately, in politics and lobbying. But for you, when you're seeing definitely this upswing in recent weeks, for the pipeline for funding as well as potential projects, what's sticking out to you and appealing?
Yeah, I think we all know there's a lot of new optimism in the space, driving regulatory tailwinds for sure. This is going to continue to push institutional adoption. I think this is across the board helpful for every part of the stack, including venture capital. I mean, we've seen billions and billions of dollars, coming off the sidelines into the markets in the past few weeks alone. I think that one of the biggest and the most exciting areas, and certainly we see, is in the spaces of microelectronics and chips and how they're helping power a lot of the compute and mining. And I think we're seeing a pretty exciting convergence here. That was already happening. I think it's just going to continue to push more and more and more. So.
That's exciting. Ben, I want to kick it to you quickly too, because one common thing that I'm seeing, at least from the DC side, but also just a lot of the conversation within the industry, is just the TradFi folks getting in. They seem like that was already going to be the play regardless of what happened with the election, but there seems to be a whirlwind now. From your perspective, what are you seeing from the TradFi folks? Do we expect that to be coming more sooner rather than later? And how do you expect that to interplay with the industry on the venture side?
I mean, it's been a wave. I mean, I think it started post Silicon Valley Bank, actually.
Yeah.
And we started to see a groundswell, obviously, and momentum into the Bitcoin ETF launches in January. But look at Larry Fink of BlackRock, just as kind of a case study. In 2017, he called Bitcoin an index of money laundering. And we're now 7 years later, and BlackRock has the largest Bitcoin spot ETF in the world, the largest Ethereum spot ETF in the world, the largest tokenized treasury product on chain, has invested in Securitize, which is a leader in asset tokenization. So it's been a full 180-degree turn from his previous kind of perspectives. And you're seeing that with BlackRock, but you're seeing Hamilton Lane and KKR of tokenized funds. You obviously have, and who?
Franklin Templeton.
Franklin Templeton has their Benji product. I mean, the list is so, like, we used to keep a list, and like we can't anymore because every week there's like another big institutional announcement. I think right now the focus has been on Bitcoin and asset tokenization. Those are areas 1 and 2. I think areas 3 and 4 on the horizon are permissioned kind of DeFi. So if you think about DeFi that has grown in this prior cycle, it's all permissionless. It's just software on the internet that anyone can interact with. It's going to become more permissioned in different formats. And then as part of that, KYC, AML on-chain, identity on-chain, all these things kind of tie together. So I think those are the two big next waves from institutions.
I think, if you just add, there's also been, we have all heard this forever, this drumbeat of the institutions are coming, the institutions are coming. And every year we sit at these conferences and somebody says, the institutions are coming. And this actually feels like the first time where they really are. And I think BlackRock is the biggest example. You're like, they're finally here, and especially with the Bitcoin ETF approvals. But then you still see, like, you still can't buy a Bitcoin ETF if you have a Merrill Lynch account. Which is insane to me, but I think they're starting to see the negative impact of that, and clients are leaving, and they're going to other platforms where they can get access to that.
Well, I think that's a great point. I mean, the term institutions is just this like monolithic single term that people use, but there are many different types of financial institutions. What we've seen is that like asset management firms have embraced this technology, whereas maybe banks have taken a step back, because for banks, this is a big threat to their margins. For asset management firms, if they can disintermediate the banks, the custodians, the broker-dealers, that's margin uplift for them. So it kind of, the term institutions is a lot of nuance that needs to be unpacked.
This is a fun fact I heard last night from a friend. The Franklin Templeton Benji, so they have one that runs traditional rails, and they have one that runs on the Stellar blockchain. The traditional rail costs them $50,000 a day. This one, $10 a day.
Yeah.
So like the cost savings that some of these institutions are finally realizing and seeing, I think will continue to drive their adoption.
Actually, building on this, Mark, I'd like to get your opinion too, just given for your unique perspective as a fund, but also, what are you seeing from the regulatory developments, or at least just the headwinds that we've had potentially coming down the horizon with the new administration? But also, are you seeing any uptick from foreign investment or foreign folks looking to get into the market?
So a few things. I mean, no matter what political party you support, this outcome has been great for crypto specifically. It couldn't have been better. You have a most likely pro-crypto administration, Congress, Senate, agencies. We don't know the new heads yet, but we know for sure they're not going to be Gary Gensler, for example, at the SEC. So we know for sure that this last 2-3 year period of regulation by enforcement and kind of to make things difficult for the industry is over. And so I think this has several immediate effects and then some second order effects. The immediate effects are you're going to see more flows of capital into the space. We had many investors who were telling us, we're interested in your product, but this regulatory situation is for us is too much. We need to see some more clarity there before we invest in the space, especially more conservative institutions. I think you're going to see second order effect. You're going to see more risk taking by entrepreneurs, in launching tokens or iterating with their business models without fearing kind of some backlash or some Wells notice or et cetera. And you're probably going to see more entrepreneurs enter the space because of the same reason. They're not in an environment where they don't know what's coming. So I think it's a pretty big deal for the space, and both from the investment side and the entrepreneurial side. So
That's
I feel
great.
like it removed the last excuse for a lot of institutions. It was like always the excuse. And now that that excuse is gone, those that haven't done the work now have no excuse not to do the work.
I mean, the regulatory thing was a big thing.
Yeah.
Think about institutions who are quite conservative. They don't want to be in the headlines. One of their underlying companies is sued. These are things that mattered to them. So this certainly unlocks institutional capital, more institutional capital, because there is quite a bit into the space.
I mean, they've been waiting for quite some time. I'll never forget when I was working on Capitol Hill, BNY Mellon was lobbying me on crypto back in 2016, 2017. Like they've been waiting for this for a long time. So it seems like we're going to maybe see some of this stuff develop over time. But as we build the tent, we got to make sure we include as many people into the crypto realm. And Elaine, I know you've been doing a lot in that space, but what do you expect kind of for this potential future bull run? But also just what are you expecting to as ways to grow the tent for the crypto industry? So maybe the crypto bro moniker fades over time. So
it is my life's mission to get more women to invest in crypto. Only 10% of US women have invested in crypto. This is a slightly dated survey, and I hope it's a little bit more now with the ETFs. So that's why we're launching Eve Wealth, to try to educate women and build communities so they can do it together. But I think crypto still hasn't had its true consumer moment. I think we see it a little bit with Polymarket, but again, that's prediction markets, gambling, not super women friendly. But I think crypto hasn't yet had, with the small exception of NFTs, this moment where you don't know you're using crypto, and it's something that's super easy for consumers to use, to onboard, to get involved. And we haven't really had that yet. Like stablecoins are obviously an amazing use case. You can send money around the world very cheaply. That's not that exciting. That's not going to bring a wave of people who are not yet into the crypto space from a retail perspective into it. So I think we need to have that user moment where you don't know you're using crypto. And I think we will get there. I'm curious what these guys think. I don't know that we've really seen it yet. But it did make me laugh that when NFTs had the moment, there were tons of women and other communities that aren't typically involved in crypto that got into NFTs. And it made me laugh because I had been banging my head against a wall trying to explain to all of my girlfriends what Bitcoin was, and they didn't get it, didn't want to hear it. And then all of a sudden they're buying NFTs. I'm like, that? You get that? You know what a non-fungible token is, but you can't understand Bitcoin? Okay. But I think it spoke to it was approachable because it was a cultural phenomenon, and it was art, and it was less, crypto bro-y, to use your phrase. So I think we need to see some more of that type of.
Yeah, maybe less karate fights at conferences or something like that. Maybe more appealing to women here. But Ben, actually, I want to go back to you. At least when you're looking forward here, what's exciting for you? DPEN's been a lot of conversations for folks I'm hearing, at least more on the DC side. But what are you looking at for the horizon?
Yeah, well, I'll kind of riff a bit more on Polymarket because we at ParaFi are the largest investor in the company. We've invested in the seed round in 2020 and have doubled, tripled down over the years. I think if you look at polymarket.com, the front end, in the past month it's gotten 52 million visitors to its website, which is 1.5x Coinbase's volumes, Coinbase.com's volume. So the vast majority of people that are interacting with polymarket.com as a news source have no idea that it's crypto. I think about Polymarket as really two products. For traders and speculators, it's a betting platform, but for the non-bettors and the non-traders, it's a news platform. Mm-hmm. It was #1 in the iOS App Store for news. I'm quite excited about it because many people also just view it as purely a political gambling site, but they've done close to $1 billion run rate in November of non-political volume. So this is across, the Premier League, the Super Bowl, the Jake Paul, Mike Tyson fight, when will the war in Ukraine end, and so on and so forth. So there's will Taylor Swift be engaged to Travis Kelce by the end of the year? I mean, there's people want to bet on bizarre things, and now with AI agents, moving on chain, I think you're going to see a lot of AI agents just crawling on Polymarket, making markets, and you leverage not only like the wisdom of the crowds of humans, but the wisdom of the crowds of AI, which is fascinating. So to me, I think Polymarket's tapped into something very interesting, and that's probably the project I'm most excited about at the moment.
Well, as you can tell, there's a lot of excitement on this panel. I'm sure there's going to be a lot more to come. So thanks again, guys, for taking time to chat, and looking forward to the next panel. Thanks again, everyone.
Thanks for having us.